In the Admiralty House dining room, the Prime Minister met three of his most senior ministers: Michael Heseltine, Douglas Hurd and Kenneth Clarke. He asked them to endorse his decision.
We got the message. Douglas Hurd, Michael Heseltine and myself, we were in a sterling crisis. And he wished to put up rates dramatically to show the political will, to defend the value of the pound, to see if it would have the effect of stabilising it and stopping the flow of our reserves out, because we were defending at the time simply by buying sterling as much as we could using our own golden currency reserves. And he got the agreement of the group that we had to raise interest rates. It was necessary. Off he went, raised rates by 2%.
Anyone want to buy a house?
Watch out, excuse me.
Intended to show strength, the markets perceived the rate rise as weakness and reacted accordingly.
We had a fairly strong sense that we were on to the kill. It indicated to us that we are at the end game, that there was no, this was an act of desperation. So instead of restraining us, it was really an invitation to double up, to try to sell as much more as possible.
The Bank of England had some £19 billion in foreign currency reserves, but it was now spending $2 billion an hour as more and more people sold the pound.
93.98. Who for? Bacon. 91 white. Is that bacon? 91. Is that bacon? Oh, God. I've got bacon here. 80.87. Who for? Bacon? 70 bits by the 8.87's out to bacon.
All of a sudden, instead of being asked to quote a price in £5 million or to sell £5 million for clients, typically they would come up and do multiples of that. Suddenly they would be coming with an interest in £20 million, £50 million, £100 million, sometimes even bigger than that.
Unaware of all this, the politicians were still hoping the rate rise had worked.
I went outside to go back to the Home Office. I was being driven by a Metropolitan policeman. And we were about halfway down Whitehall when the driver said to me, "It hasn't worked, sir," because he'd been listening to the radio. And the radio had been commenting on the market reaction, and he was right. Within 10 minutes, it was obvious it hadn't worked. The run on sterling was going ahead. I went back to the Home Office, potted about with a bit of work, and of course I was back in Admiralty House within half an hour because the meeting was reconvened. What do we do now?
At the Bank of England, the man in charge of defending the pound believed it was time to throw in the towel and stop spending before the bank's reserves were exhausted, even though that would mean letting the pound crash out of the ERM.
Well, my view at that stage was that the game was up. The scale of the intervention became heavier after the rise in interest rates, because I think there were some people in the market who said that makes no sense in the context of the UK economy.
A further interest rate rise to defend the pound would be disastrous for the economy, and there was no evidence it would work. Norman Lamont again advocated suspension, but Michael Heseltine, Kenneth Clarke and Douglas Hurd disagreed.
Most of them wanted to make it clear that we'd gone the final mile to remain within the ERM.
There were some people who said, well, are you absolutely confident that if we raise interest rates further, that won't actually persuade the markets? I thought that extremely unlikely, but I mean, in those circumstances, if people wanted to try, then that was something that one couldn't exclude. It might just work.
John Major decided to raise interest rates a second time to 15%.
Did anyone think it would work?
I don't know if anyone thought it would work.
MLR's 15%. 15%. What? 15%. 15%. Effective from tomorrow. 15% MLR.
The interest rate market, which was sitting 30 yards away, exploded in noise. We thought, we can't believe it, the Bank of England's raised interest rates again. That was a sign of weakness, not of strength.
The more those rates go up, the more it's going to be worse for the pound, isn't it? Mortgage rates, no way. 10 done. Dollar mark.
There was a very, very small rally in sterling. It went up maybe a third of 1%, a very, very small rally for such a big rise in the interest rates, and immediately settled back on the floor. And the Bank of England was still buying pounds.
That afternoon, it became a veritable avalanche of selling.
In a sitting room inside Admiralty House, Michael Heseltine, Douglas Hurd and Kenneth Clark now sat drinking tea, hoping against hope the second interest rate rise would work.
It was whilst we were in the sitting room in the afternoon that we suddenly realised that we were probably less well informed than practically anybody else in the United Kingdom about exactly what was going on. And so we actually began to search for a transistor radio. We decided that we should try to keep in touch with the money markets. And here we were, cooped up in Admiralty House, three people in the country least well informed about the hour-by-hour movements in the money market, which kept being reported to us and upon which we were acting.
Realignment this week, Trent Bank Chief Economist said.
By mid-afternoon, the Bank of England had spent £15 billion. It was running out of money with which to defend the pound.
10 bid at 30, 10 bid at 30.
Rumours swept the markets that Britain had persuaded Germany to cut its interest rates to relieve the pressure.
She says that the Bundesbank may drop rates by a quarter point again. They're waiting for them to do something. Yeah.
Prime Minister was all right. I mean, he was in the same position as the rest of us. That the government was suffering a major calamity, and that we found we had not got sufficient control over events, and the British government couldn't stop it. No government could stop it when that amount of market sentiment was moving so much money around so quickly, and we had an indefensible value of the pound. And John was in perfect control of himself and in control of the such businesses we could handle throughout the day.
The Prime Minister was calm and matter-of-fact, and indeed usually in the heart of a crisis, in the very eye of the storm, in my experience, things are calm and quiet. It's before and afterwards that the emotional storms, the nervous storms begin to blow.
Keith, I've done the dollar side, I'll just work the multiplier now, right?
The government made no announcement, but the Bank of England now withdrew from battle.
At 4 o'clock, suddenly the Bank of England wasn't supporting pounds. Instead of a load of noise coming out of the voice brokers and everything and around the dealing room, everyone just sat in stunned silence for about 2 seconds or 3 seconds, and all of a sudden it erupted and sterling just free fell. That sense of awe that the markets could take on a central bank and actually win, I couldn't believe it.
So how many pounds have you sold?
About £500 million.
£500 million. So has it been good business?
Yeah, it's been really good. Yeah.
What does that mean to the bank here?
We've had an excellent day. We've made a lot of money, so it's good.
What are we talking about? A couple of £100,000?
Probably about 10 million.
Black Wednesday happened because the currency dealers could see the conflict between the British economy, which needed one thing, and the German economy, which needed another. And then they reacted. As Britain considers whether to join a single European currency, the one question is, what's to stop it happening again? The speculators are waiting. They remember the fortunes they made on Black Wednesday.
It was $1 billion, in excess of $1 billion of profits, because we had a position approaching, I think, $10 billion, and the fall was more than 10%.
21! 40. That's big figures.